Hi, this is G-Man Trading Community. My friend, we have come from far. Now you are a CFD trader and you are spot investing trader. You can differentiate between investing and trading, the difference in the market. Now, at this point, we said that we are going to talk about charts. The reason we will talk about charts, we'll lead on this video and see why we have to go to charts first before going to practical. There's a reason. Now today we have all the system on our hand about CFD. Literally, that is true. You know how to count pips, you know what is lots, you know the pip values, you know what is leverage, you know how to control profit and loss, you know bid and ask, you know spread, you know a lot of things about CFD. And I said CFD is somehow hard, but it's not hard that no one can understand, because it was created by someone. This system was created by people, and despite the spot investing, which is a straightforward systems. Let's go on. Let me take you back a little bit. When we were learning about blockers, there was a system introduced called MetaTrader 4 and later Meta 5. It came to help faster executions. Chart, now you can look price history. Now you have charts which you can look price history of a particular asset. Robotic trading, quotes. Long time ago these were sent into gazettes, you know, but with Meta 5 and Meta 4 you could see the fluctuation real time, how they are changing real time. You could do robotic trading, and now you could manage your positions. Long time ago people used to make some calls to open position, to make some call to close positions, but now you do it on your own. You are the one to close and the one to open, to put some stops, stop loss, or take profit. So the Meta 5 and Meta 4 came to help on that, and they got it good. So you can put stop loss and take profit, and a lot more. A lot of things you can do in the Meta 4 and Meta 5. This system assumes you know pip value per lot size of $1 when base and when it's quoted. So one thing I want you to understand, in MT5, now it's like a vehicle. It has some gears, some pedals. But you went to school and learned about vehicles, how to do driving. Now you don't have to go direct to the book to know how the steering works, how the pedals work, because you did all that. Now that's how the MT4 treats you. It treats you that you know the pip value. So when it displays maybe some particular number, you understand them because you have already learned about them. That's so when you are opening position, when you are counting pips, so the system are straightforward. They assume that you know that, but literally you know, because you have learned from this channel how to count pips, how to join them with lots and see the pip value in terms of money. A lot of things you have learned in this channel. So something else is position opening is done through lots. So position opening is done through lots. So you say if you are opening a position of 2 lots or 2 mini lots or micro lots, because at the point of opening position you don't talk about movement. The movement is the one which will come later, and it will depend with the market, but the decision is upon you when it comes to the volume of money that you want to buy. So the lots are the executioner. They are the one to execute position. done through lots. You decide how many lots you want to buy or sell, and the pair. You decide on this pair I want to buy this kind of these lots, and then I'll target this distance. If the distance comes true, then you will be in money, but you will use lots when executing. You must decide how much you want to buy before even opening a position, but literally the amount that you want to buy will be the executioning point. So, but you do know, because I taught all that. You do know that, you know that, because I literally taught that. Now, today let's hold a bit and look for a way to engage in this guessing game and see whether there might be a way we can master the art. First, we need the charts as technical analysis. This will help see the performance of each currency against the other. So before we go on, now in this sector, people have mastered some particular movements, and let me tell you, my friend, there are thousands and thousands and thousands of strategies, meaning that that's how people think, because every strategy developed, that was a particular person looked at the charts and came up with a way of trading which could benefit him or her. So people have mastered a lot of ways of trading in this CFD, and they have gone all that hassle just to have an ability to guess, to predict, because every strategy is for predicting the future of particular asset. So when you predict that this price will reach at this point, if that comes true, you are in profit. You are in profit, and people have gone hassle for all that. So let's go on. One thing is, technical analysis is the study of price movement. In one word, technical analysis is equals to chart. Now people came up with a way called a technical analysis. So the MT5 helped so much, because now you could see the price data and persist a habit or a method, because of seeing something for many times, or you see a particular pattern, you could go back in time and come looking whether you could see the same pattern many times, and you see how it behaves after it pop-ups in the market. So that's how technical analysis works. So the idea is that person can look up history price movement, and based on a price action, you can determine at some level where the price will go by looking at charts. So you can identify trade or the pattern which can help find a good trading opportunity. So people have persisted maybe looking at chart pattern. You could see here people talking about flags, head and shoulder, cup and handle. Those are patterns which repeat themselves in the market, and when they repeat themselves, people now tend to know how they react after they represent themselves in the market. And could hear if a double bottom shows up, it will go at this point and then reverse. People have mastered a lot of strategies in the market. Another thing, they could master even the candlestick pattern. You could hear some words like this is a pin bar, this is an engulfing, we have maribuzu, we have continuation patterns, candlestick patterns, we have reversal candlestick patterns like inverted pin bar, a lot of patterns which and the reason they are called pattern is because that they repeat themselves in the market, and when they repeat themselves, people tend to take opportunities from them, believing that they produce a lot of returns. So the most important thing you will ever learn in technical analysis is trend. And many people have the saying goes, the trend is your friend. The reason for this is that are much more likely to make money when you find a trend and trade in the same direction. So the reason it is the saying goes that the trend is your friend is because when you find it when it is starting, my friend, that can make you a fortune. So people now tend to use technical analysis, candlestick patterns, uh, so that they can spot those opportunities in the market. Technical analysis can help you identify these trends in its earliest stage and therefore provide you with a very profitable trading opportunity. So that's why now people have mastered. That's why you need charts. Charts are very important. They help people to spot some opportunities in the market. They help you to master some behavior which are repeating themselves, and you see when these behaviors repeat themselves, you tend to know what happens later. You predict. You are able to predict much how you are like your position when you open. It's like maybe 50% risk or 60% risk, something like that. Let's go on. Let's look at the most common chart in the market, which is candlestick chart. Candlestick started in Japan back in 1800s. They were used to track the price of rice. One thing is that they have different sizes. Each and every size has its own meaning, and they are reversal candlestick, we have continuation, and a lot more. We will just hit the basic and now heading to practical in the charts into a meta quotes in the phone and computer broker reviews. So my friend, we have heard about candlestick, which is one of the charts which I will talk about. I don't talk about lines so much, but the most controversial topic when it comes to charts is the candlestick pattern. People tend to use it. They love candlestick patterns so much. So, and we have had candlestick patterns were used back in Japan in the 1800s to track the price of rice. To track the prices of rice. So, in the next page, we are going to look at the trends. So these are candlestick. It looks like this. It has an opening and a closing. But in an opening, you have a high. No, this is a close. So if it's bullish, which we will talk about it, bullish is when the market is going up. So it always opens from the bottom going to the upside. So when it opens here, it might swing down. Now that would be considered as the lowest of the day, and then it will go so high, then come back. That this is the highest of the day on that particular day, and it would close somewhere like this, and it makes a candle. So we have different. It can close at this point. That candle has its own name, something like that. So it's a lot. And when it is a bearish, which means that the market is going down, it opens always on the top going to the downside. So it could open here and swing up, which now that will be the high of the day, and then drop and to this point, which this will be considered as the lowest of the day, and then it would close at this point. So whichever place it closes, there is a particular name of that candle. It would shape particular candlestick name. So you could see we have reversal patterns. Now this morning star, evening star, we have 3 black soldiers, 3 white soldiers, a lot of reversal patterns here, and we will see them in the charts as we go in the charts. Now these are candlestick pattern. Now this is a chart pattern. chart itself, chart pattern. So we have a ranging, and this is a trend. We have a trend, and you can see. So this is a chart pattern. This is another chart pattern. This is a flag. This is a triangle. This is a flag. Something like that. We'll learn all of this, and these are head and shoulder. So people consider to give them names. So this is a head and shoulder pattern. This is a chart pattern. This is a candlestick pattern. This considers with a single candle to know what would happen in the market, and this is it tracks the patterns of the whole chart and see whether it can support something like this, like head and shoulder. But when we go to practical, a lot of people will now understand. Make sure you read and repeat this theory, because now when you go on a steering in a car, you don't have to go back to a book to see that this is a radio, this is a gear lever, this is a pedal, acceleration pedal, this is a brake. So you don't have to go back there. You always understand when you open a position, because at that point you need a faster execution mindset, which is ready to do that. So thank you very much, and consider subscribing as we go on. Thank you.